Hi, welcome back to Auto Experts tonight. Now we're going to get to a subject everyone loves talking about, life insurance. Nothing gets the party started like talking about planning for your death and what happens when you die. If you have a question about life insurance, you can give us a call here at 728-1001. So Gord, let's just start off again with the basics of what exactly is life insurance.
Life insurance. Death and taxes, two certainties in life, and life insurance addresses both of those.
Right.
What is a life insurance policy? Again, it's back to that legal contract between yourself and an insurance company, or an entity. A corporation can be the owner of a life insurance policy. Linked to the life of a person. When that person does pass away, there is a payment that occurs. It is generally a larger payment, and it comes in a lump sum and tax-free.
Tax-free, okay. And so what different kinds of insurance is there? Is it just in terms of when you're purchasing life insurance, what kind of options do you have?
If we subdivide it into two streams, we get what's commonly referred to as term insurance.
Right.
Which is often thought of as more temporary insurance, and then permanent insurance, which the common names we hear attached to that is universal life and whole life policies. All three of those different types are quite unique. Figuring out which one that you should be looking at first will be largely based on your objective or what you're looking for the policy to do for you.
Right. Okay. So what basically is the difference between like term and permanent? What when someone says term, perm, what's the basis? What should you look at to understand the difference between the two?
It gets into the pricing of your premium.
Right.
So the common bands or the common premium terms on term would be term 10, term 20, and now in modern times we're seeing a bit more term 25, term 30, term 65. There's some variations of it. We'll go right back to the start. When I talk about something being a term 10 policy, when you go and you apply for that policy, the understanding is if you are approved, the insurance company is only guaranteeing that you will have 10 years of that initial premium pricing. Right. After that 10 years, it's not that your policy is suddenly null and void, but there will be a significant jump for that 11th year. And when we look at the tables, or if we were to do a sample quote, it's a significant jump. When would someone keep a term 10 policy in effect in that 11th or 12th year? The reasons really come down to maybe they've lost touch with their advisor, or maybe they haven't got around to reviewing their policy, or there's a significant health issue they believe on the horizon, where they're okay paying the significantly increased premium on the expectation that there's probably going to be a claim soon. Term 20 is something that we often see attached with mortgages, since a lot of people hope, whether it happens or not, they hope to have their mortgage removed within 20 years or shortly thereafter. The dream, right? That's the dream. And then, the difference with whole life policy or UL policy is those generally will have a level premium for the lifetime of the policy, and right up until the point of death at whatever age that eventually occurs at.
Okay. And the difference between whole life and universal life, whole life, they have guarantees, right? Guarantees on your cash value, guarantees on a premium, whereas with a UL you have two parts of it. So you have your insurance and then an investment account. So there's some flexibility with the investments. You get to choose where you invest it, but then there's also there's no guarantee there, so there's some risk involved. So.
Yeah, the way I would describe those to someone who's talking to me or looking to buy a policy would be, if you're wanting to be a bit more aggressive with your insurance policy and you're comfortable making those investment decisions, then UL is probably the product for you. If you're someone who maybe is a bit more conservative, doesn't have the expertise, or maybe just doesn't want to spend the time, then as you mentioned before, the guaranteed values of a whole life policy probably look very attractive. If we trace back historically, dividend scales and payouts on the whole life policy has been very good. When people are presented with those numbers, it makes a strong argument for a whole life policy, unless they're hoping they can beat those numbers with a universal life.
Yeah. Yeah, universal life, you need more maintenance
Yes.
to monitor those investments. You pay a bit more for the whole life, but then you get your guarantees. So,
Yeah.
And so, is there a type that's better than another? Is term better than UL whole life?
You're going to put me on the spot.
Yes.
It's terrible to admit, but yes, I do have a bias. I do tend to lead towards term, especially with younger clients or people who maybe are buying a policy for the first time. I'm not saying term is the only product that I would ever recommend or that we deal with,
Right.
but that is the common starting point, or where I recommend people start.
Yeah.
The reason or the argument for doing so is they can acquire a large lump sum of coverage at a very affordable cost. And then with the majority of term 10 policies, you're given certain privileges. The first one would be to exchange that for a term 20 or convert it into a whole life or a UL policy at a later date.
And that's a good point too, someone buying a term, to make sure that there is that conversion option
Correct.
in there, because sometimes there isn't.
Yeah.
And if that leaves the door open to change your mind later on. So
even if you're expecting to convert, it makes the whole decision of what to purchase a little bit more complicated. You may want to pay a little bit more for term coverage with company X than company Y, knowing that if your goal is an eventual conversion, you have a preference for the universal or the whole life products with company X.
Yeah.
And again, that's something that if you're very open and you have a great discussion with the insurance advisor helping you, they'll be made aware of that that thought of conversion or that expectation to convert, and they can walk you through. Because sometimes saving a few pennies today isn't going to make you happy 3, 5, 10 years down the road.
Yeah, I mean that's another good point too. That's the benefit of meeting with an advisor, an agent, and talking openly with them about your plans, what you want the policy to do eventually. It's something you're not going to get buying a policy over the phone or through email on by yourself, right? So it's always good to sit down with someone and talk about it and get to really understand exactly what is available out there. You don't know what you don't know, so it's a very good.
People do tend to fall into the how much trap when they're seeking life insurance. And we do this with a lot of major purchases, cars, houses, just focusing on that initial price rather than taking a step back and saying, okay, what am I looking to do here? It is that objective of what you want the insurance policy to do. If it's simply, I have a line of credit, I worry about my partner's ability to fund that line of credit if I were to pass away.
Yeah.
You purchase maybe the very basic term 10 policy to cover off that need.
Yeah.
The term policy will be canceled fee-free or expire, and hopefully the debt is wiped out.
Yeah.
That's at the very simple, and it's easy to kind of price that. If you're talking about something more complicated, an estate issue, leaving a legacy, business succession, all of those you're getting into far more complicated, far more pricier policies, and that's something that's going to take a lot more time to kind of sort through and decide what's the right fit for you.
Yeah, exactly. In that point, there's a lot more involvement. You need some discussion with the outside, possibly accounting, taxation expert, just to really make sure you're doing the correct thing. So it's a little more work involved in details. So it's not just simple buy something and walk away. So.
If it is a larger policy, you'll likely have an accountant and a lawyer involved with it,
Yeah, exactly. So you mentioned, covering a debt or a line of credit. A big topic out there right now is mortgage insurance. So the insurance that you get when you buy your mortgage at the bank, they offer, if you pass away, they pay off the mortgage, and they say it's life insurance. What is the difference between that mortgage insurance that the bank is selling you opposed to like an actual life insurance policy?
Yeah, it's a good point to bring up. A lot of people are selling different types of insurance, and it's important to know which type that you're buying. My bias or my belief is that everyone should look at medically underwritten life insurance through an independent advisor, which no secret why I might have that bias based on the work that I do. the reality is that's going to give you the best coverage at the most affordable price.
Yeah. I mean, that's a good point to the underwriting process. What a lot of people don't know is that with the bank, when you purchase that insurance policy, it's not underwritten, so it's not guaranteed to pay out. They don't do that underwriting. They don't determine whether or not you should have been covered until you make that claim process, and that just kind of adds to the whole stress of the situation. Chances are the claim could come up denied, simply because you didn't answer the question correctly on the initial application. The other thing to point out too is that you need to be licensed to sell life insurance, which someone working at a bank selling a mortgage typically is not. So they can't even really answer any questions you may have there. So it's kind of not really the best thing, I think.
My concern with the bank, the mortgage insurance, or what's generally attached to mortgage, comes at a time when people are overwhelmed. Mm-hmm. They're focused on the rate and the renewal, and it often just comes in as an add-on. And it's something good to have. I mean, it's a very significant.
It's better than nothing, but
it is better than
options,
nothing.
Yeah.
The problem the concern that I have with it is that post-claim underwriting, where once there is a death or once there is a claim being made, that's when they open the file and they begin to scrutinize. Yeah. If I go back to my earlier example of wanting everyone to go through medically underwritten life insurance, if you are doing medically underwritten life insurance, you're likely doing it with a licensed advisor.
Right.
And there's also the advantage of licensed advisors having a requirement to carry errors and omissions insurance.
Exactly.
And that's your added guarantee that even if there was something wrong in the process, there will be that extra insurance protection on the process of buying your insurance protection. Exactly. So you're very much guaranteed, unless there was some sort of fraud or material misrepresentation on the part of the individual seeking, which does happen. Yeah. The insurance company is going to pay out swiftly and with little paperwork. Yeah. And at the time when you are facing the loss of a loved one, that's what you want. You don't want to then be in this long process of paperwork and scrutinizing.
Exactly. Yeah. Calling a call center when you that's the other advantage too, having an advisor and agent when it does time to make that claim. You have that advisor to contact who can help you through that process, tell you what you need to get, and it's not calling the bank or a call center trying to figure out what's going on. So. It's an added advantage there. Also, too, speaking, it's not just life insurance that they do sell too. Critical illness policies too. They sell through the mortgage as well, right? That's another.
There's been a significant spike in sales of what I refer to as consumer critical illness, and it's often on consumer debt. So it will be that you have a credit card, and it looks to be an insignificant add-on that, okay, for a few bucks more a month, why wouldn't I? Mm-hmm. If you actually, again, trace through buying, if you are looking for critical illness policy, buy it as a standalone coverage through a proper policy. If you look at your net cost of insurance, it'll be significantly lower than buying one of those consumer policies. Yeah. They are an add-on, and if you're worried about it, have a proper discussion and determine the amount of critical illness insurance that you want to purchase.
Yeah, exactly. Perfect. So that's a great time. We got to go for a break, and we'll be right back.